Hey, this is Matt from InvestiQuant. Today is Friday, August 30th, 2019, and today is the last trading day of the month. So I wanted to go over a couple quick studies here and show you some historical biases associated with the last trading day of the month. The first one I want to share with you here is just getting long at the open on the last trading day of the month. So I've selected last trading day of the month. I'll go ahead and hit all results and view results, and we will see the bias here for going long with no stop and no target, entering at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time on the last trading day of the month. And from the chart here, you can quickly see that it has been a losing strategy historically, pretty consistently losing money here as it drips to the downside. If I come back up to symbols and settings, I can just switch this to a short and rerun it so you can see what happens if you'd gone short at the open on the last trading day of the month. Every day going back to, I think it starts January of 2003. And you can see it gets better if you're going short instead of long. Win rate standing at just shy of 58%. So not perfect, but the general bias there has been to the short side on the last trading day of the month. So there is one bias to be aware of. And this is no stop, no targets. So just a general bias here. But one other thing I wanted to share with you is more of an intraday trading setup. And that's the 60-minute range low breakout on the last trading day of the month. I'm going to stick with this end of day stop, end of day target, and view results. So we can kind of see the same thing, but the entry is delayed until getting a break of the low that is made in the first 60 minutes of trading. So if you wait a little bit and you get a little bit of confirmation as it starts to break down from the 60-minute range, you can see the equity curve gets quite a bit smoother. This is still no stop, no target, so do with that as you will. But the bias looks better to me. Equity curve looks smoother as the win rate goes down a little bit, but the average win to average loss ratio stays pretty strong. So I hope you found that interesting, and come back sometime soon. We'll do this again.